Welcome to our comprehensive guide on option trading. Before we dive into the intricacies of support and resistance, it's vital to understand what option trading is. Simply put, option trading is a type of derivative strategy where traders buy or sell options, which are contracts that give the holder the right, but not the obligation, to buy or sell an underlying asset at a predetermined price within a specific time frame. There are two types of options: calls and puts. Call options give the holder the right to buy the underlying asset, while put options give the holder the right to sell the underlying asset. These options are traded on public exchanges, and their prices fluctuate based on the market. In option trading, you'll come across terms like strike price, which is the predetermined price at which the underlying asset can be bought or sold, expiration date, which is the date until which the option can be exercised, and premium, which is the price paid for the option. Now that we have a basic understanding, let's dive into the concept of support and resistance in the next scene. These concepts are the building blocks of technical analysis in option trading and can significantly enhance your trading decisions. Ever wondered why finding support and resistance in option trading seems like trying to find a needle in a haystack? It's a common challenge for many traders, but don't worry. Today, a solution lies within your grasp. First things first, understanding what support and resistance means in option trading holds the key. Picture this. Support in option trading is similar to the floor of a room. It's the price level at which demand is strong enough to prevent the price from falling any further. Resistance, on the other hand, is like the ceiling of the room. It's the price level where selling is strong enough to prevent the price from rising higher. Voiceover. You might be wondering, why are support and resistance so important in option trading? Well, the answer is simple. They are key indicators of market trends and potential price reversals. Support and resistance levels are like the heartbeat of the market, giving us clues about where the price might head next. When prices approach these levels, they can often bounce back, indicating a good buying or selling opportunity. For instance, if a price falls towards a known support level, it might be a good time to buy, expecting the price to bounce back up. Conversely, if the price rises towards a resistance level, it might be a good time to sell, anticipating the price to fall back. But what happens if these levels break? It can significantly shift market sentiment. A break above resistance could signal a bullish trend, enticing more buyers into the market. Likewise, a break below support could suggest a bearish trend, triggering more sellers. Understanding these levels can greatly enhance your trading strategy, giving you a better perspective of the market dynamics. So, keep an eye on these levels, and let them guide you in your trading journey. Now imagine this scenario. You're in a room where the floor and the ceiling keep changing positions. Sounds disorienting, right? That's exactly what happens in option trading. When prices break through the floor, it often becomes the new ceiling and vice versa. This phenomenon is what traders call role reversal. So, how does one find these elusive levels? Here's a step-by-step guide. First, start by identifying the highs and lows on the price chart. These points mark the levels of support and resistance. Second, draw horizontal lines connecting these points. This visual representation will help you understand where the price might find support or resistance in the future. The third step involves observing the volume. Volume increases when the price reaches a support or resistance level. This is because traders are more likely to buy at support levels and sell at resistance levels. The fourth step requires patience. Wait for the price to test the support and resistance levels. If the price bounces back from these levels, it confirms their validity. Lastly, remember that these levels are not set in stone. They are zones where the price might change direction. Always be ready to adjust your strategy based on the market's behavior. To sum up, finding support and resistance in option trading involves identifying the highs and lows, drawing horizontal lines, observing the volume, waiting for the price to test these levels, and being flexible with your strategy. Remember, in the unpredictable world of options trading, the only constant is change. The floor can become the ceiling and the ceiling can become the floor. But with the right tools and a bit of patience, you can navigate this shifting landscape with ease. So keep charting those highs and lows, keep an eye on the volume, and most importantly, stay patient. After all, good things come to those who wait. Until next time, happy trading. Alright, we've covered the theory. Now let's dive into some practical tips and tricks. First, don't shy away from using technical indicators to help identify support and resistance levels. Tools like the Relative Strength Index, RSI, Moving average convergence divergence, MACD, and Bollinger Bands can give you a clearer picture of where the market is heading. Second, patience and discipline are your best friends in option trading. Don't rush your trades, wait for the right setup, and once you've entered a trade, stick to your plan. Lastly, always manage your risk. Never risk more than you can afford to lose, and always set a stop loss. It's better to get out of a trade with a small loss than to risk blowing up your account. Remember, practice makes perfect, so keep honing your skills, keep learning, and keep trading. Happy trading!